Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY slipped to around 96.82, extending losses after weak US data reinforced expectations of Federal Reserve easing. A softer retail sales report showed consumer spending stored in December, adding to concerns about slowing growth. Markets are now pricing in a higher probability of 3 Fed rate cuts in 2026, up from 2 just a week ago. The dollar also faced external pressure after reports that Chinese regulators advised institutions to limit their exposure to US treasuries. From a technical perspective, the primary trend remains bearish. The index is trading below the 20-day moving average at 97.73 and the 98 psychological level, confirming downside bias. While the broader economy still shows some resilience, failure to reclaim 97.97 keeps pressure on the downside, with 97 and 95.56 remaining as key levels to watch. Next up, let's have a look at crude oil. WTI traded around $64 after rising earlier in the week on geopolitical tensions before easing as signals from US-Iran talks reduced fears of any immediate military conflict. The decline in geopolitical risk premiums weighed on prices, although downside has been limited by a weaker dollar and continued US pressure on Iranian energy trade. Technically, oil remains in a medium-term consolidation range after failing to break above 66.25 last month. Momentum indicators suggest the current pullback is corrective rather than a trend reversal. $63 is key near-term support, followed by 62 to 62.2 zone, while 64.5 caps the upside ahead of the 65.8 to 66.2 resistance area. Next up, let's have a look at gold. Spot gold traded near $5,040 per ounce, supported by a weaker dollar and expectations of softer US data. Attention remains on upcoming employment and inflation releases, with the market already pricing in at least 2 Fed rate cuts in 2026. Ongoing gold purchases by the People's Bank of China, marking a 15th consecutive monthly increase in reserves, continue to provide some strong structural support. Gold is holding above the $5,000 psychological level, underpinned by central bank demand and rate cut expectations. Tighter liquidity, however, has limited the upside momentum, keeping prices in a consolidation phase. Technically, pullbacks towards 49.11 or the $4,800 area remain important reference zones, while a sustained break above $5,100 would reopen the upside towards 51.82, with a long-term focus still on the historic highs of $5,600. Lastly, let's have a look at the Australian dollar, which traded around 7075, easing after 2 days of gains as mixed domestic data weighed on sentiment. Consumer confidence fell sharply following Australia's recent rate hike, while business confidence improved to its strongest level since October. Broader moves remain sensitive to upcoming US jobs and inflation data. Despite the short-term pullback, the pair remains in a clear uptrend, holding above the 70-cent level and the 9-day moving average at 7013. Recent volatility followed a surge towards 71 cents and then the $72 psychological level. On the downside, 70 cents still remains key support, with further backing around 69.85. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.